Alright, I've been reading about Nvidia to basically see if I want to invest in it in 2024. And if you stick for another couple of minutes, I'll summarize what I learned and give you my take of the company. Some people love Nvidia and some are shorting it. We have two big dogs, one betting against the whole semiconductor space and one buying call option on Nvidia for 2024. Nvidia had already reported insanely impressive numbers for Q2 this year, but Q3 came out even better. Q3 revenue more than tripled to 18 billion. Up 206% year over year. For a major business that's worth more than $1 trillion, this is an insane growth rate. Out of this 18 billion, 13.4 is gross profit, or simply revenue minus the direct cost of the product. Gross profit increased 321% year over year. The gross margin also increased significantly. Nvidia reported gross margin of 74%, up 20% year over year. Operating income increased from 601 million in the same quarter last year to 10.5 billion this quarter, an insane increase of 1600% year over year. But we also need to point out that the last year operating income was incredibly low, so this high of an increase was partly due to the fact that we had a really low operating income last year. And operating income is basically gross profit minus general operating expenses such as administrative staff and research and development. Free cash flow, or the money that would end up in your pocket if you own the entire company, jumped from negative 156% to 7 billion this year. Earnings per share came out at $3.71, up more than 1200% year over year and 50% more than last quarter. This essentially means that for every share outstanding, Nvidia made a profit of $3.71. So if you owned one share of Nvidia, $3.71 was your take of Nvidia's bottom line. Number-wise, company couldn't have reported a better number. It was an absolutely top-notch earning report and possibly the best one I've seen for a company that's worth more than $1 trillion. And this is reflected in the stock price. The stock is up 245% in 2023 alone and is standing at just below $500. This brings the market cap to $1.22 trillion. Nvidia has around $18 billion worth of cash and around $11 billion of debt, bringing the enterprise value, or basically what it costs to acquire Nvidia as a whole, to $1.2 trillion. Nvidia brought in $45 billion in revenue over the past 12 months. This is an increase of 64% compared to this time last year. Net income came out at 19 billion, a whopping 200% higher than this time last year. They also brought in 17.5 billion of free cash flow over the same period. Based on these numbers, the company is trading now around 26.5 times revenue, 65 times earnings, and 68 times its free cash flow. So with the current valuation, if you buy the company outright as a whole, it takes you 65 years of collecting earnings or 70 years of collecting free cash flow to just break even. That is an insane valuation. Clearly, the company is growing at an insane rate and it is valued accordingly. But the problem is that I don't think this sort of growth is sustainable, and we already see it. On this financial year, on the second quarter, the revenue grew by 88%. On the third quarter, the revenue grew by 34%. And based on the company's guidance, on the next quarter, it will grow by 10%. Still, this is insane how fast Nvidia is growing. With 10% growth, Nvidia will bring in $20 billion in just one quarter. But at least we see the picture. We cannot expect the same insane growth over the long run. And in my opinion, there is a couple of risk factors that can hamper their growth. One of them is that currently around 22% of their revenue comes from China and around 24% comes from Taiwan. And if US government restrictions ban them from selling their chips in China, this can seriously damage their bottom line. But fortunately, in the past couple of months, it seems that US-China situation is getting a little bit better. Nvidia can also be impacted by the competition that's coming from the likes of AMD, Intel, and with some recent job openings, it kind of confirms that big players like Apple and Microsoft are trying to be their own GPU designers. But I really believe that the barrier to entry is just extremely high. And one concern that possibly everybody has is how sustainable is this sale of Nvidia chips. So simply, how long do companies keep buying chips from Nvidia? In a recent interview with Nvidia CEO, he mentioned that we are barely starting the second wave of AI development, and we haven't even started the third wave, which is basically the use of AI in heavy industries, which could be the biggest one yet. So clearly, from his point of view, there will be no shortage of demand for the company's product over the near future. But one thing that concerned me is that Nvidia is simply too expensive for some language model and some small, medium-sized businesses. So for example, GPT-3 costs OpenAI roughly around $4.6 million to train. And I can see only a decreasing trend on operational costs of these language models, because that is the only way that AI opportunity can reach smaller businesses. And Intel is doing a great job targeting those markets. And another concern is that the company projected to grow revenue by 54%. And Nvidia's revenue come mainly from selling chips. And although you all know it, selling chips is not a recurring revenue. So it's not like a SaaS company. So the company has to sell the same amount of chips that they sold this year, plus 54% more. And it is completely feasible. It is completely possible given the current demand. But in the long run, given the price tag on those chips, the companies that had already bought them tend to make the most out of their current chips, which makes the cycle time longer for buying a new one. Alright, now that we talked about the concerns, the future, everything that we just learned about Nvidia, now it's time to look at valuation to see if the current valuation makes sense. But it is rather difficult to see how Nvidia grow their bottom line and top line over the next 5 to 10 years, let's say. Will they grow their revenue and their free cash flow by 10%, by 20%, by 50%? It's really hard to tell. And given the track record, they tend to surprise us once in a while. So I did the opposite. Currently, Nvidia is trading at around $500 a share. I went and calculated how much Nvidia should grow over the next 10 years to justify today's valuation. I used a discount rate of 10% because that's roughly what you get if you invest passively in a mutual fund or an ETF. And I used a free cash flow of $17.5 billion that is over the past 12 months. With these numbers, Nvidia has to grow their free cash flow by 20% every single year for the next 10 years and 5.5% on perpetuity to justify $500 price tag of today. And I'm not saying that it doesn't, because actually it is in line with what they did over the past 10 years. The average annual growth rate of their free cash flow over the past 10 years is 22%. But what I'm saying is that it will be a little bit more difficult given the company's valuation. It is now more than $1 trillion company. Wall Street analysts expect Nvidia to grow bottom line with around 14% over the next 10 years. And with that growth rate, it doesn't really justify the $500 price tag right now. In my view, somewhere between 300 to 350 would make more sense if that is really a growth rate that we will gonna see over the next 10 years. And Nvidia can be perceived cheaper now than it had last year. And I know it sounds crazy because the stock price ran so much this year, but if you take into account the growth, so last year we didn't expect Nvidia to grow as much as we expect Nvidia to grow next year. So if you take into account the growth, then you can justify buying Nvidia now at this price tag, although it had 245% growth over the past year. For me, I don't have a position on Nvidia, and I know the whole industry will grow. And Nvidia and other two major players, AMD and Intel, will grow among each other because I don't think it's a one-take-all kind of industry. And Nvidia always tends to have the upper hand compared to those two guys. But the risk-reward ratio for me currently at $500 a share is just not there. Maybe with a little bit of a pullback, I might start a position in 2024, but let's see how it goes over the next quarter. Thank you very much for watching all the way to the end of the video. Please consider liking and subscribing to the channel, and let me know which stock do you want me to get into next.